Hello everyone, welcome to Smart Market Insights here on Kalkine TV. I'm Sage. Today we'll be shining some light on the rising inflation in 5 sectors to watch out for. Inflation has reached impossible levels in Australia, making things uncertain for an already battered economy. The inflationary pressures have heightened to a state where experts are predicting an earlier than expected rise in interest rates. The latest data from the Australian Bureau of Statistics reveals that annual consumer prices rose by 3.5% in December 2021, although underlying inflation stood at 2.6% in December. Inflationary pressures have cast a shadow of uncertainty for investors who intend to prevent their portfolios from inflationary pressures. Rising inflation is expected to impact several sectors differently, with some benefiting from a price hike. Now let's look at some sectors that are expected to face the impact of rising prices. Consumer staples. Firstly, talking about consumer staples, investors must understand how much pricing power a particular company holds in the face of rising inflation. In an inflationary scenario, consumer staples companies tend to pass on prices and their rises to consumers as they hold greater pricing power. Consumers often are willing to pay for staple goods despite the increasing prices, as such products are essential for their daily lifestyle. Thus, individuals find it hard to give up on consumer staples goods even as their prices rise. Investors looking to invest in companies to hedge against inflation can ponder consumer staples entities. These companies continue to generate somewhat stable revenue levels even in the face of adverse pricing conditions. Construction and business capital goods. Second comes the construction and business capital goods. Not all sectors are poised to take down inflation with a solid punch, and experts believe that construction and business capital goods are volatile sectors and highly susceptible to losses in an inflationary environment. Specifically, capital goods, which are primarily dependent on inventories and warehousing, bear the brunt of shipment delays. For instance, consider that inventory in a warehouse has been produced during low inflation. Thus, by the time these goods reach the markets in an inflationary scenario, price hikes eat away the real value of such goods. And essentially, each additional dollar paid for these goods in the present day is valued less than each dollar used in the making. Thus, investors must carefully examine these sectors before investing in them during an inflationary period. Now, after construction and business capital goods comes real estate. The performance of real estate sector has been driven by a range of factors in the past 2 years, including record low interest rates. The real estate is largely considered a hedge against inflation, as it has less correlation with the nominal markets. Now, unlike stocks and bonds, the real estate market is not impacted immediately by changes in consumer prices. However, it is worth noting that Australia's real estate sector is under significant price stress, and additionally the fears of rising interest rates are mounting due to the high inflation, creating a crash-like scenario in the red-hot property market. Investors willing to beat inflation can ponder on real estate investment trusts, or REITs, as they offer a diversified foray into the property sector. The major rise in prices during the COVID-19 scenario has stemmed from rising commodity prices, primarily fuel and minerals. And due to lockdown restrictions and broader closures, the global causal factor for the price rises in these sectors has been supply chain disruptions. Notably, the futures market has strengthened to hope that minerals prices can rise further in the coming months. And meanwhile, Australia, being a resource-rich nation, also expects much bigger changes. And we'll have a little bit more on this for you in just a moment.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Welcome back to the Smart Market Insights. So we were talking about the effects of inflation on the Australian sectors, and Australia, being a resource-rich nation, also expects higher export revenues. Thus, investors may keep a watch on the commodity-linked stocks that benefit in a high inflation environment. Consumer durables and luxury items. Lastly, let's see the impact of the rising prices on the consumer durables and luxury items sector. Now, unlike resources, consumer discretionary sector can be adversely affected during the inflationary times, as consumers usually delay their purchases for the durable goods for a lower price. And to the uninitiated, consumer discretionary goods are non-essential items that can be postponed for consumption. Now, due to the lower demand for consumer durables in an inflationary period, suppliers may be forced to offer goods at a lower rate, reducing business profit margins. Thus, investors should be cautious when adding companies tied to these discretionary products in their portfolios. Proper technical and fundamental research seems imperative before taking any investment decisions. Well, that's all for now. We will be back again with the exclusive Smart Market Insights show. Till then, keep watching Kalkine TV for the latest market updates and related insights. And thanks for joining us today. I'm Sage, signing off.